If you want to make passive income on the stock market, then you need to learn how to sell options. Now, selling options on the stock market is actually really simple. The first thing you're going to want to do is choose a stock that you don't mind holding. Then, simply purchase 100 shares of that stock. From there, you simply choose which option chain to sell options against. Let's look at an example. SoFi, ticker symbol SOFI, is currently trading for $22.11. You would need to purchase 100 shares of SoFi to be eligible to sell options against it. That will be an initial investment of $2,211. Next, you'll want to choose an expiry date. That's the date on the options contract when the option expires. And typically for most stocks, that day is a Friday. However, quick note, the further out the expiry date, the more expensive the option. So when you're selling options, you need to choose the expiration date that works best for you. Then you need to choose whether you're going to sell options in the money or out of the money. In the money simply means that the strike price is closer to the share price. So a $22.50 strike price would be in the money. And out of the money simply means that it's further out from the current share price. So a $27 strike price would be out of the money. Another quick note, closer in the money options are more expensive, and you'll make more money selling in the money options. However, you'll have a higher probability of those options being exercised and you losing all 100 shares if that happens. So this is the current options chain for SoFi. And you can see that it has expiration dates of August 15th, August 22nd, October 17th, January 16th, 2026, and even December 17th, 2027. And within all of these dates, it has additional options. And you can see that the call options go from $22.50 all the way up to $25. And yes, they continue to go up from there. Now, selling options is a strategy in of itself. For example, you could sell the $22.50 call that expires on August 15th, and you would collect a premium of $45 for doing so. However, SoFi has a pretty good chance of hitting $22.50 before this Friday, so I would steer clear of that one. Similarly, you could sell the $23 strike price with an expiration of August 22nd, 2025, and you would net $54 for selling that option. But again, SoFi stock has a high probability of hitting $23 on or before August 22nd. And when you sell options, you're trying to keep the shares in your account while generating passive income on a weekly basis. So I wouldn't do this one either. In complete honesty, if I was doing short-term covered calls, I would likely choose the $24 strike price, which expires on August 22nd. And that would net me $29 in passive income. Now, a few things can happen in this scenario, and I'm going to keep it simple and only explain the main two. The first is that SoFi ends below $24 on or before August 22nd, and you get to keep all 100 shares plus the premium you received. The second is that SoFi stock surpasses $24. Your call option would be assigned, and you would be forced to sell all 100 shares at $24. You would still get to keep the premium and any profit you made between $24 and $22.11, but would miss out on the opportunity cost if SoFi stock continues to rise above $24.